In this video, we will look at portfolio of Terry Smith. He's a famous British investor that I follow. He has a great track record of beating the S&P 500. In the recent quarter, he sold Johnson & Johnson. He sold almost all of his position, ticker J&J. He also trimmed Microsoft, and he bought 2 new stocks. So in this video, we will briefly look at the fundamentals of Johnson & Johnson. We will try to determine the reason why he sold his position in J&J, and we also briefly look at 2 his recent additions. So let's get started. First of all, if you are not subscribed to the channel, you can do this by pressing the subscribe button under the video. You will not miss a single new video. Okay, in the middle of May, we can see what super investors bought in the first quarter of 2022. And Terry Smith is a super investor that I follow. He has a great track record of beating the S&P 500. So for me, it was really interesting to see what kind of additions he have and what he sold in this recent quarter. So I know that he's a long-term investor. He very rarely sells and buys stocks. So for me, it is really interesting to see what kind of stocks he added and what he sold. So this is from their 13F filing. You can open it using the Edgar search. You type the name of the fund. In this case, Fund Smith. If a fund owns more than 100 million, he has to disclose what he bought and what he sold. So the fund has to disclose all his positions after 45 days after the quarter ends. So Terry Smith manages around 30 billion. So after 45 days after the quarter, he has to disclose what positions he has. There is a much simpler way to do that. Instead of searching the Edgar search on the sec.gov, you can use services like Dataroma. So according to his 13F's filings, he sold almost all his shares of Johnson & Johnson, ticker J&J. He has trimmed 20% of his stake in Microsoft. And he also added 2 new stocks. He added Adobe and MTD. So he sold almost all his shares of Johnson & Johnson. He usually does that if he finds something better or if he sees the deterioration of the business. In case of Microsoft, he trimmed only 20% of his position, so I do not see it as a huge indicator that he's bearish on Microsoft. He still owns around 10% of his portfolio in Microsoft. So we will concentrate on the sale of Johnson & Johnson and the purchase of Adobe and Mettler Toledo International. We are building a tool that will help us to determine the key ratios and will help us to determine its intrinsic value. So we will run the calculation for each of these 3 companies. Okay, first we will look at Johnson & Johnson. Okay, so we punch in the ticker J&J. We can see that it's from the healthcare sector. It has a 464 billion market cap. We can see that the price is almost flat for the recent year. If you want to make a deeper dive on any of these companies, please write in the comments below. That seems not to be an issue. It pays a dividend of 2.4%. It has a payout ratio of 56%. It definitely has a moat. It has a return on equity of 26%. If we look at some of the valuation metrics, we can see the growth rate for the last 5 years around 5%. So if we look at the intrinsic value of the stock, we can see that analysts are projecting for the growth rate to be around 4.6% for the next 5 years. If we use the current price to earnings, we can see the intrinsic or fair value of the stock of $136 per share, which implies that the stock around 22% overvalued. Okay, Terry Smith uses free cash flow yield as a valuation metric. If we look at the current free cash flow yield of Johnson & Johnson, we can see that the current or last free cash flow yield is 5.2%, while the average is 5.4%. So it is very close to its average free cash flow yield, so it doesn't seem to be undervalued or overvalued according to its own history. Okay, so now we will compare it to another stock, Mettler Toledo International. It is also from the healthcare industry, so it is possible that he changed Johnson & Johnson to Mettler Toledo. Okay, so we punch in the ticker MTD. We can see that it is also from the healthcare sector. You can see that it is a much smaller company, around 27 billion. It produces medical devices. We can see that it gone almost nowhere for the last year. it is significantly up for the last 5 years. We see that the debt seems not to be an issue for MTD. It doesn't pay a dividend. It definitely has a moat according to these numbers. The average growth rate was around 5–10% for the last 5 years. But analysts are projecting for the growth rate for the next 5 years to be around 17%. If we do a deeper dive on this company, we have to determine if the growth rate of 17% is reasonable. If it is reasonable, then the stock seems to be undervalued and offers around 34% upside. Okay, if we compare the free cash flow yield of MTD, Mettler Toledo International, to Johnson & Johnson, we can see that the last free cash flow yield for MTD was 3.1, while the average was 2.67. So compared to its own history, the stock seems to be trading above its average free cash flow yield. So the stock seems to be undervalued. The free cash flow yield is high, almost it was in 2020. So it has a much higher free cash flow yield compared to its average, compared to Johnson & Johnson. And his second addition is Adobe. I have used Adobe Photoshop, Adobe Illustrator, so it definitely has a moat. If you worked in Photoshop, it takes so much time to know and study another software, so the switching costs are extremely high. Okay, let's briefly look at Adobe's fundamentals. Okay, we punch in the ticker, ADBE. We can see that is 188 billion market cap. It's from technology sector. The stock is down for the last year. We can see that debt not seems to be an issue, doesn't pay a dividend. It definitely has a moat and it's visible in their numbers. Analysts are projecting for the growth rate to be around 14% for the next 5 years. If we use the growth rate of 14% and the price to earnings, current price to earnings of 39.58, we get the net debt adjusted fair value of $481 per share, which implies around 21% upside. So Adobe seems to be undervalued according to this metric. If we look at the free cash flow yield, which Terry Smith uses as a valuation metric, we can see that currently it is close to 4%, while the average for the last 3 years was 2.9. So Adobe seems to be undervalued compared to its own history. So knowing his investment style, we can determine the reasoning behind his purchases. Okay, so Terry Smith sold almost all his shares in Johnson & Johnson. He added 2 new stocks. So this is how his portfolio is looking right now. So he trimmed other positions, but the decrease wasn't as significant as Johnson & Johnson. So I do not believe that he is bearish on these stocks. Okay, so his portfolio is centered around 20 core positions. So for me, it was really interesting to see what kind of additions his portfolio had in the recent quarter. Also, I have made a video on the investment style of Terry Smith. Here's the video. If you are not subscribed to the channel, you can do this by pressing the subscribe button right here. You will not miss a single new video. Thank you very much for watching till the end and see you in the next video.